India stands at the gateway of its biggest tax transformation in recent years. From the shops on your street to mega businesses, the new GST reforms promise to simplify life, make goods cheaper, and reshape our economic landscape. But what exactly is changing? Why now? And how will it impact your everyday life, your business, and the broader Indian economy? Hello everyone, welcome back to Avlokan IAS. In this video, we are going to decode GST 2.0. So stay tuned till the end. Now let's rewind a bit about GST. When GST, the Goods and Services Tax, was launched in 2017, it promised to unify India's fragmented tax system. Instead of tangled web of central and state taxes, GST aimed to bring one nation, one tax. But despite these good intentions, GST turned out to be more complicated than expected. There were four main slabs: 5%, 12%, 18%, and 28%. Plus a few special rates like 0.25% for precious stones, 3% for gold, and even compensation cess above this. For both consumers and businesses, the system was often confusing, causing disputes and compliance headaches. On the occasion of Independence Day 2025, our Honorable Prime Minister Narendra Modi announced from the Red Fort that it's time for the next generation GST reforms, promising a double Diwali for Indian families and businesses. The government's mission is clear. It is to reduce the tax burden on citizens, simplify compliance for businesses, and boost consumption and economic growth. So, what's being proposed? Here is what the GST 2.0 looks like. The four slab system 5%, 12%, 18%, and 28% will be streamlined into just two main slabs, the 5% and 18%. A new super slab of 40% will apply only to luxury and sin goods like high-end cars and tobacco. Nearly all items that were taxed at 12% will move to 5%. Almost 90% of items in the 28% bracket will drop to 18%. This move aims to make routine shopping bills smoother and smaller. Let us examine in detail which groups are poised to benefit from these proposed GST reforms and which goods are likely to become more affordable. To begin with, essential household items like soap, toothpaste, bags, clothing, and footwear will see a significant reduction in GST from current 12% down to 5%. This change is expected to offer direct and noticeable savings to consumers purchasing necessities for their family's needs. Moving to higher value purchases, goods such as refrigerators, televisions, air conditioners, and other consumer electronics have historically been taxed at a steep 28%. Under the new proposal, most of these will be brought under the 18% GST bracket. According to various analyses, consumers could realistically expect to save up to 10% on many of these products compared to current prices. This change can particularly benefit households planning large purchases during festival seasons, a time traditionally associated with increasing spending. The automobile sector is also set to witness important changes. For small and mid-segment cars, the headline GST rate will decrease, making these vehicles more accessible to the middle class. However, it is important to note that some luxury vehicles such as high-end SUVs may actually become costlier, as these could be shifted into the new 40% GST category designed for luxury and sin goods. Mobile phone users will find welcome relief as well. Smartphones under 15,000 are expected to move from a 12% GST rate down to 5%, making everyday technology more affordable for a large segment of the population. Other sectors such as travel and insurance will also be positively impacted. Turning to businesses, the GST reforms aim to significantly ease compliance. Simplifying tax slabs will reduce classification disputes and lessen ambiguity, particularly benefiting MSMEs and startups by lowering their compliance costs. Technological advancements are central to these reforms. Automated refunds and pre-filled GST returns, similar to income tax processes, will enhance accuracy and speed. Registration procedures will also be streamlined, making it easier for new businesses to enter the market. By reducing administrative burdens and promoting transparency, the reforms are expected to improve the overall business environment. This can encourage entrepreneurship, boost productivity, and foster great tax compliance, supporting India's economic growth. Before continuing further, I would like to inform you about our free answer writing initiative in Telegram, wherein we provide a UPSC level question daily and we will freely review them and give valuable insights to the answer. And Avlokan IAS also runs the paid evaluation program at a very affordable price, wherein we provide detailed evaluation of your answer, highlighting your strengths and weaknesses, and suggest your areas of improvement. The link of the both will be provided in the description. Do check them out. Thank you. The existing GST framework faced several challenges that necessitated reform. Notably, the inverted duty structure caused input taxes to exceed those on finished goods, leading to litigation and inefficiencies. Additionally, unclear classification of products created confusion and frequent rate changes impacted long term planning. GST 2.0 intends to address these issues through rationalized tax slabs, clearer categorization, and greater rate stability. These reforms aim to create a more predictable and investor friendly tax environment, thereby fostering economic growth and reducing compliance burdens. While tax rates on many products are coming down, the government will see an initial dip in GST collections. Some experts estimate a short term giveaway or revenue loss of 2 to 2.5 lakh crore. But here is the government's big bet. Cheaper goods encourage more people to buy, which boosts consumption. As people spend more, overall tax collections could recover and even grow over time. However, some economists believe that not all products are elastic. Just reducing GST doesn't always double sales. For essentials, demand won't dramatically spike just because of lower taxes. But for things like cars and electronics, we could see a visible boost in purchases, especially during the festive season. It is important to note that these GST reforms remain proposals until approved by the GST Council, established under Article 279A of the Indian Constitution. The Council consists of representatives from both center and the states. For any major change to be adopted, a 75% majority is required, with the center holding one third of the votes and the states collectively holding two thirds. This framework ensures cooperative federalism, necessitating consensus among the stakeholders. The government aims to secure approval in the forthcoming GST Council meeting scheduled for September, with the intention of implementing the reforms before Diwali 2025. While GST reforms are promising, certain challenges and concerns remain. It is uncertain whether businesses will fully pass on the tax reductions to consumers or retain some portion as additional margin. The anticipated increase in consumption may not entirely offset the initial revenue losses faced by the government. Achieving consensus among all states and stakeholders could present political challenges. The impact of India's fiscal deficit on overall government finances requires careful monitoring to maintain fiscal discipline. Addressing these concerns effectively will be crucial for the successful implementation and long term sustainability of the GST reforms. The GST framework is a prime example of cooperative federalism requiring active collaboration between the center and the states. Both have significant stakes in GST revenues, making their consensus essential for any reforms to be enacted. The need for consensus ensures that the interests of all states are considered, preventing unilateral decisions by the center. This balance is fundamental to the GST's design and critical to maintaining the cooperative spirit that underpins its successful implementation. In conclusion, the proposed GST reforms aim to create a simpler, more transparent tax regime that benefits consumers and businesses alike. They promise to reduce the tax burden on essential goods, simplify compliance for enterprises, and facilitate long term stability in tax policy. Collectively, these changes are expected to stimulate consumption, promote economic growth, and strengthen India's fiscal framework. The success of these reforms will depend on their effective implementation and the continued cooperation between the center and the states. If executed well, GST 2.0 could mark a significant milestone in India's journey towards becoming a more prosperous and equitable economy. What do you think? Will GST reforms make a real difference in your life or business? Drop your questions and opinions in the comments below. Like, share, and do subscribe for more. Thank you.